It's Wednesday, November 30th, 2022. Lots to talk about today. Markets went absolutely crazy today. We'll talk about that in a minute. Before we talk about all that, I observed something last night that I wanted to share with all of you before we start this video. And it's a reminder that we really appreciate what we have, whether it's our family, our friends, our health. We're so blessed, and many of us don't realize that. And I look at certain things and it makes me stop and think. And last night I was starving for a flame-broiled burger, so we went to a place close by, and as we're pulling up to this little diner, there's a paramedic in the parking lot, and we go into the establishment, and they are helping this older gentleman, probably in his early 80s, maybe mid 80s. And apparently he had just fallen down, spilled his drink, and they had him in a seat, and he didn't want to go to the hospital, so they would not take him to the hospital. They did tell him, hey, if you need help, call us back, we'll come get you. Are you sure you don't want to go to the hospital? He's like, no. And they made him sign a few things, and they left. So he gets his food, and he's sitting there, and he has one of those little three-wheelers, and he's sitting there, and his hands were so riddled with arthritis. It looked like he was missing fingers, literally, because they were just curled up like this. And he had ordered a hamburger. He could not even pick up the hamburger. He was trying like this to grab the hamburger to feed himself. And luckily, one of the people there that works there, young lady, came over and cut his hamburger into 4 pieces. And he was really struggling. And I look at somebody like that, and just, you know, cannot even feed himself because of his arthritis, and all alone. Paramedics just leave. It's sad. It's really sad. And as we, now are entering December and Christmas, and I see something like that, it just makes me think, how blessed I am to have people around me and to have health. And so many people out there don't have family, they don't have friends, they don't have a good network of people, they don't have health. They have a lot of problems, and my heart just went out to this old gentleman. It's so sad. You want to eat, you're hungry, and yet you can't even feed yourself because your hands don't work. And what would that man do to have his hands working so he could feed himself and have a more normal life? What would he give for that? So I wanted to share that with all of you, because it really touched me last night, and it made me really think how blessed I am. We all have aches, we have pains, we have bad days. We get stuck in traffic, we get stuck in a long line at the store. It's not the end of the world. When it's bad, when your hands are so disabled with arthritis that you can't even pick up a hamburger and feed yourself. That's a bad day. And it's going to be bad every day for that gentleman. And what's left for him? It just really made me think. And I want to share that with all of you, because you're all blessed too. And look, maybe you have a bad hand, maybe you have a bad arm, maybe you have a bad eye, a bad leg. But look, you can feed yourself, you're functioning. Maybe you have family and friends. Maybe you have a roof over your head. Maybe you're eating. You're blessed. You're so blessed. And there are people out there that just have it so bad off, ladies and gentlemen. And we should be thankful to God every day for what we have. But on another note, let's shift gears and talk about what happened today. Dow Jones was down about 200 earlier today until Jerome Powell came out with his speech, and he signaled smaller rate hikes. Now, what a surprise. I think most of us knew that December we were going to get a 50 basis point rate hike, and we were going to have a few 25 basis point rate hikes in 2023. So he reiterated that today, and wow, the markets absolutely loved it. Dow Jones up over 730 points, NASDAQ up 484 points. So this is all it takes now for the market to rally, is one man can just say a few words and it can move a $20 trillion economy. The markets no longer move on what's happening in the economy. The markets move on what Jerome Powell and the Fed says. That's it. The markets move on what one man says, not on what's happening in the real economy. Think about that. The markets are moving on what the Fed says. I think that's really scary. I really, really do. And that's what we've been witnessing for quite a while now. And I mean, was this really incredible news? Did I miss something here, that we're going to see smaller rate hikes? I mean, we that's what we've been told for months. But yet the markets use this as justification to surge over 700 points on the Dow, 484 on the NASDAQ. And it's all because of what one man says, not what's happening in the real economy. Do you think the economy is going to get better because the Fed is going to raise rates at a lower level? So instead of 75 or 50 basis points, they're going to go to 25 basis points in 2023. Do you think that that's really going to help the economy? The economic data that I'm looking at, that many of you are looking at, shows big problems ahead. Very big problems. We have a crumbling economy currently, plunging consumer confidence, savings rate 3.1% a year ago. The savings rate was 8%. Manufacturing plunging, more job losses, household debt at all-time highs. It's just one disaster after another. But look, we're not going to get 50 basis point rate hikes now. We're going to get 25 basis point rate hikes. So that should make everything better. Private hiring increased by just 127,000 jobs in November, well below the estimate. ADP reports. The estimate was 200,000. We got 127,000. We lost 100,000 manufacturing jobs. We lost 77,000 jobs in professional and business. Financial activities, we lost 34,000. Information services, 25,000. But the great news is, ladies and gentlemen, we gained 224,000 jobs in leisure and hospitality. So we have more people making coffee. We have more people flipping burgers. We have more people working at resorts, more people working at casinos. So that's the good news. So we have lots of waiters, waitresses, and bartenders. So that's the good news. That's going to keep the economy pumping. Mortgage rates fall for the third straight week, but demand still drops further. Mortgage demand is down 41% year over year. Refis are down 86% year over year. Yet the Dow Jones is up over 700 points today, while we are now beginning to watch the meltdown in real estate. There is so much bad economic data out there, and it's almost laughable what took place today, but it's not, because it's very, very scary, because people are going to get duped and suckered back into these markets thinking that everything is safe, everything's going to be okay, because we have a big rally today, and because the Fed now is going to lower rates less. So they're going to slow down. So now that, is that the pivot? Is that the big pivot that the markets have been waiting for? A slowdown in the raising of rates and maybe a pause. So we'll see how it all plays out. I see big, big trouble ahead, ladies and gentlemen, and I know most of you do too, and that's why we are preparing. And with what happened today, it's another reminder that you better stay on track and be preparing. This scares me more when I see these melt-ups, when I see the Dow go up over 700, the NASDAQ up almost 500 points, while the entire economy is melting down. We see what's happening across the globe. There's just chaos erupting across the world now, and our markets are going up. So I'm glad I have gold. I'm glad I have silver, I can tell you that. Crypto exchange Kraken lays off 1,100 employees. There's more news today, more layoffs. We're going to see a lot more layoffs coming. Here's one from the Hedge. Housing demand vaporized after rates hit 7%, and new wave of inventory is next. We're going to see this panic buying that we saw over the last couple of years take place come into panic selling. So we're going to go from panic buying, and it's going to evolve into panic selling. We're going to see so many people in 2023, investors, private sellers, running to the exits. Airbnb, all these type of people going to be running to the exits to dump these homes. We're going to see massive amounts of panic selling beginning in 2023, no doubt about it. Inventory is going to really begin to climb at the beginning of the year too. So here's the problem: we have mortgage rates that are now double than what they were a year ago, and right after Christmas, you're going to see inventory really take a hit up. And we're going to start seeing inventory really begin to pick up in the first quarter of 2023, while inflation, the cost of everything, continuing to go up, while mortgage rates continue to go up, and while there are less and less qualified people, buyers, to purchase these homes. So the housing industry has a lot against it. It's got inflation, mortgage rates, and qualified buyers to fight against it, and it's going to have a very hard time beating this and winning the battle. And the only way it survives is the sellers are going to have to drop prices. Otherwise, there are going to be no transactions. Another article from The Hedge: U.S. pending home sales plunged to biggest annual drop ever. Pending home sales down 4.6% month over month, down 36% year over year. But again, people will say prices are at all-time highs. Prices can stay at all-time highs, but if they do, there is going to be nothing bought, nothing sold, ladies and gentlemen, and that's not going to happen. The market is going to buy and sell. The problem is it's going to be the seller who's going to have to give in here. The seller is going to lose here, and the buyer is going to win. Really, the last couple of years, the sellers have won. Now, it's beginning to turn, and it's just the beginning. In 2023 is when it really begins. This is when I believe you're going to start seeing some really nice deals. This is when I'm going to be in the market, and I believe that the deals will be even better in 2024. Chicago PMI collapses to lockdown lows, screams recession. So we have Chicago PMI at 37.2 versus the 47, which was expected. It's a huge drop. Again, markets up today. They don't care. Markets don't care. They just care about what the Fed says. And they're looking for anything good. Anything. Inflation relief checks going to residents in these states. See if you qualify. 20 states are going to be sending out these relief checks. So anybody that says the economy is doing better or that we have a strong economy, and somebody today on Fox Business was talking about the strong consumer. Well, the consumer is so strong that 20 states are sending out inflation relief checks. What a contradiction when you look at these markets doing what they did today and 20 states having to send out checks to people. And how is this not inflationary? Where does this money come from that 20 states are going to be sending out all of this money to help people with inflation? They're creating more inflation by fighting the inflation. It's absolutely absurd what's going on. But again, today was ludicrous, to say the least, watching this take place. Dow Jones down 200. Jerome Powell comes out, pumps the markets a little bit by really not saying anything we didn't already know, and the markets go absolutely bonkers. And so they're looking for anything to justify a rally. But you have to ask yourself this question. Markets rallied huge today. Did it help you at all? Did it help you at the pump? Did it help you at the gas station? Did it help you paying rent? Did it help you buying a house? Did it help you at your job? What did it really do? I'm sure it maybe helps some people at the very, very top, but these markets are in big, big trouble. The entire economy is in trouble. And I totally believe that housing is going to bring it all down. Housing, the biggest industry on planet Earth, is getting absolutely bludgeoned right now. And the stock market is going up. That's quite confusing to me. It really, really is. We watched, I think we had the 10-year bond yield at 3.77, and I think it's at 3.69. I mean, they bring this thing down so fast. Be careful with what you're watching, ladies and gentlemen, and what you're believing right now. And so many people are gonna, they're gonna feel better. They're gonna ease up a little bit. Maybe they'll get back in the markets. Maybe they'll spend a little bit more on Christmas. Things are improving. This is what they want. This is just the calm before the storm, ladies and gentlemen. And again, as I said earlier, it's more scary to me watching these markets rally up over 700 points, almost 500 on the NASDAQ, than if they went down 700 points. And they should have got crushed today. With some of the data that I just shared with you today, how could these markets absolutely not get beat up today? And the job numbers. I mean, so if it wasn't for leisure and hospitality, we would have been in the red. So how many waiters, waitresses, coffee makers, and bartenders do we need in America? And how is this going to support the U.S. economy? It's not. It's not. And we have too many people now relying on credit cards and stacking up so much debt just to live day to day. And these people are going to get absolutely smoked when all this implodes because they have nothing to fall back on. They have no preparations whatsoever. And I was talking to somebody yesterday, and I just said, it's too late for so many people now because they're so broke. 3.1% savings rate. Household debt at all-time highs. Credit card debt at all-time highs. People are reliant now on debt to survive. And so they are literally beyond living paycheck to paycheck. They're living credit card to credit card. They're working 2-3 jobs, and people are getting laid off every day. And people are just struggling to pay the bills now, and they're falling behind. When you have 20 million households in America last month that couldn't pay their utility bills, and you have 41% of small businesses that could not pay their rent last month, that's a huge problem. That's a huge problem. Did the markets help that today? I mean, it's just a really scary time. It really is. And I don't think people realize how bad this is about to get. It's going to get really, really bad, and people are not ready for it, and people have not been preparing for it. And you cannot prepare for this in a day or a week or a month. And so many people have already missed the boat. It's too late. And now they're broke. They have nothing put away, and they're on borrowed time. They're on borrowed time. So stay on track, ladies and gentlemen. Time is not your friend. Time is running out. Things continue to get bad. You can watch the television, and the analysts and the economists today are celebrating. They're jumping up and down, telling people it's time to get back in, buy all this up. It's all on sale. Wow. Look at what happened to FTX. Look at what happened to so many of these crypto companies, and take it as a lesson to what is going to happen to the rest of the stock market, because that's what's going to happen. Be very careful, ladies and gentlemen. God bless. Thanks for watching. Please give this video a thumbs up, share it, and make sure you hit the bell notification so that you are alerted with the newest videos. Talk with all of you very, very soon.